We now move ahead towards the next panel discussion, that is access to finance, fast-tracking growth. The panel will discuss how government initiatives such as loan guarantees and tax breaks can make credit more accessible for startups and SMEs, along with the transformative role of fintech in loan processes. It will also cover the significance of financial literacy, alternative funding options, data-driven risk management, and the collaborative efforts needed to build a supportive business ecosystem. It's my honor to now invite on stage the panelists and the moderators for the session. May I please have on stage Mr. Siddharth Mahanot, co-founder and director of Indifi, Mr. Sundeep Mohindru, Chief Executive Officer, M1 Exchange, Mr. Dhrubashish Bhattacharya, Head of MSME Banking and Co-Lending, Bank of Baroda, Shri Ranojoy Chowdhury, General Manager of SIDBI Venture Finance and Investment Vertical. And the moderator for this session, ladies and gentlemen, is Mr. Mohit Gupta, Senior Director, Sales, Dun & Bradstreet, India. Mohit, you're right there. Okay, fantastic. I think we were talking about financial literacy not too long ago, and we mentioned about how financial literacy is rather less when it comes to women. So I'm looking forward to some really interesting conversations on how we'll actually churn this entire panel discussion. Over to you.
How do I address you? Your name?
Malita.
So thanks, Malita. I think you did a fantastic job. Otherwise, it's always tough to have a session after the lunch. All these exercises that you made audience do actually has got some energy back. So thank you so much for that, Malita. And today's panel that we are running today here, we have representation from BFSI, we have representation from PSU, and the fintechs and the startups. So I mean, a very vivid experience probably you'll see. As part of the panel discussion, we'll try to cover 4 tracks out here. The track 1 would be on the financing part, how the government initiatives and the technology development in finance can actually help debottleneck some of the challenges in terms of raising capital. We will talk about how financial literacy is key for entrepreneurs. We will also talk about how the utilization of data and analytics can help in terms of having better risk frameworks. And from the business side, as an entrepreneur, how can you be better prepared for a credit appraisal. And last, with the entire ecosystem, which is the government, the BFSI, the fintechs and entrepreneurs can work together to create a conducive environment for growth. So that's what we cover in our panel discussion today. And to start up the discussion, my first question is to you, Sundeep. And many congratulations that when I was reading an article, you crossed 1 lakh crores in terms of disbursement. And I think last year you did somewhere close to 47,000 crores in terms of discounting, bill discounting. However, the TREDS platform which government has created is actually trying to address the concern which SMEs had earlier in terms of availability of finance at a faster pace, and in some way it's addressing the credit gap. But friends, the gap when it comes to SME having access to the formal capital, only 14% of 64 million MSMEs today have access to the formal capital, and rest of the people struggle through the informal channels or trying to still work out their ways to get into the formal channel. And the credit gap in India stands hopping amount of $530 billion. So thanks for doing your own contribution in terms of addressing the gap, but that brings to an interesting question to you, Sundeep, in terms of what is your reading in terms of the acceptability of TREDS platform now, almost after a decade of launching it, and you being one of a pivotal member out there.
Thanks, Mohit. Thanks for having us, and to the entire DNB team. So yes, you are right. TREDS, there are 3 TREDS entities in India, and together we have done 3 lakh crore worth of financing. We are growing 100% year on year. So it's 6-year-old phenomena. from go live. And if in 6 years we have done 3 lakh crore, this year itself, all 3 will do 3 lakh crore again.
Wow.
Okay, so it's that kind of acceptability which is coming in the market. And thankful to the banks. So like I was just speaking before this with Bank of Baroda and being one of the prominent financiers on the TREDS platform. The confidence of the bankers to bring the liquidity on TREDS is one of the key factors for the success. In the early days, one of the thoughts that we had to walk with the banker was that this is a digital asset, invoice is coming digitally. You are not meeting the customer face to face. Looking at the invoice, you are doing the financing. And today we have reached a stage where we are blessed that every bank has a desk for TREDS, a special team for TREDS. One of the banks even has a branch for TREDS.
Yeah.
Right. So this is one of the reasons because the liquidity is higher on TREDS and therefore the growth is happening. The second important factor is there is no dependence on the credentials or the financials of the SME.
Correct.
So the audience here, this is very important to understand that scalability, it is not very scalable product when you have to do a credit analysis for everyone, you have to find out the collateral for everyone. So this is more dependent on the credit analysis of the customer of the SME.
Okay.
So the SME has done its duty of supply of goods and services. Now basis his customers' risk, which are mostly rated companies, we are immediately able to finance, and that money comes on the second day of the financing, and which therefore makes the working capital gap reduce for the SMEs. So we don't have to depend on their balance sheet.
Right.
So that's another reason for scalability. The third prominent reason, or rather I would say the commercial reason, is the cost of financing.
Yeah.
Now for a bank, like I said, the bank is not meeting the customer. The bank doesn't have to do branch banking here. Everything is coming on a digital. It's more like a screen or a monitor you are doing on a stock exchange. You're buying and selling the invoices. So for a cost of doing business for a bank has come down. Now similarly, the cost of financing for an SME, because it's on the customer's dependence, customer's credit rating. So the customer's credit rating is bringing the cost to, let's say, 8% per annum or 9% per annum versus the cost of an SME who would have done on his own credentials, unsecured lending would have been nothing less than 12 to 15% per annum, maybe higher.
Yes.
So there is a cost reduction of 6 to 8% for the ecosystem. And that cost in turn passes on to the buyer as a part of the negotiations or the contract, and therefore he also takes an interest today in approving the invoices. Earlier we had this challenge, but now it is. So these are the few reasons which are bringing the confidence up, and the acceptance has gone up.
And when you said 3 of them doing each 3 lakh crores today, I think you meant RXIL, Invoice Smart. And I think joining the gang now is C2FO, which have been also now licensed to run a TREDS platform. So I think this is a fantastic progress in terms of what government initiative happened almost a decade back. And when I was a banker, we used to struggle, why should we allocate a part of our working capital to TREDS? Because there was no liquidity or there was no interest at that point of time. But seeing the progress that now these volumes are being dealt in the market is significant.
Yes.
Yes. So that brings me to slightly a different part, and to you, Siddharth. There has been a lot of development in terms of the financial institutions now. The technology is playing a big role, and you represent a young coming up institution, right? What is the role that technology is doing and helping in terms of credit appraisals, and then probably helping trying to bridge some of the gaps? Maybe if you like to throw some light out there.
Yeah, so I think there are 2 parts to it. One is the technology, and other is the various what you call as regulatory benefits that have come in. So for example, now you have an account aggregator framework wherein so if you go back 10 years when somebody had to apply for a loan, they would give you such a thick file of documents, right? MSME who's dealing with transactions on a monthly basis will have a bank statement itself which will run into a few hundred pages, right? And every page had to be printed and given to the bank. Now almost all of that data, be it the bank statement data, is available through an account aggregator. Your GST data is available easily through a consent mechanism. Even if you are checking invoices, they are easily verifiable through any invoicing system. So the entire infrastructure has gone through a sea change. Obviously, the benefit of that is what the fintechs and even the other lenders are now using. So one is your reliability of the data, ease with which you collect data has become very easy. What then we do on top of that data is build our own analytics, right? So how do you analyze a customer using data-driven models rather than individual biases or people, making their own judgment on cases? So the attempt has always been to use data and technology and make lending as structured as possible, as parameterized as possible, and the infrastructure developments along the way has helped him. The other thing that we attempt to do is make lending more contextual and more embedded. So today, if there's an MSME and he's doing business in a certain place, and let me give you an example of what we do at Indifi, we partner with multiple large players, say e-commerce platforms like an Amazon or Flipkart. So if an MSME is on a daily basis interacting with those platforms, selling his goods and services, we know that that's the place where he's doing a majority of his business. Can we make financing available to him right there into that chain? So we embed ourselves with multiple platforms where MSMEs are interacting with, and make financing as part of that platform itself, which makes it much easier, simpler, and more contextual, because people know, okay, if I'm selling on an e-commerce platform, the last 30 days of sales was so much, I have so much receivables, this is my working capital gap, which if possible, I would like to get it financed.
This is very relevant, because I know whoever would have attended the Arun Singh session in the morning, he's our chief economist, and he was talking about it, that India's rejection rate on the SME loan is the highest, and that actually refrains a lot of SMEs to actually approach the formal channel. Maybe they are not prepared for it, but I think some of the work that is now happening where the data can be directly integrated will actually help for the SMEs and the startups to bring more confidence to probably approach the formal channel. Just expanding the discussion to Mr. Bhattacharya and seeking a flavor from the as a PSU banker. Traditionally, I think we all had a mindset that PSU bankers, you have to walk in, and a private banker will walk into your office. With times, things are changing, right? And it's no more the same era. I think I have seen now the PSU bankers becoming more approachable. They're reaching out to the market on their own, and some of the work that they're doing is fabulous. And I think in your earlier session, you were talking about some of the products that you have developed, which are does not require collateral as well, right? So what is that probably you think is not changed, and which is still needs to be changed in PSU banks, which probably you see as a bottleneck for access of capital to an SME or a startup?
Thank you, Mohit. So thank you for having me once again in this esteemed panel discussion. So let me break this whole problem into two parts. So one, as I said in my earlier talk, that see, we have a social agenda and we have a agenda which purely drives the P&L. Now, with respect to MSME, we have a 14% which rests on the social agenda. Now, that is somewhere the government bodies, various bodies, they in collaboration with the banks, they drive the credit growth. So it's essentially the financial outreach programs which the government holds, and the key sponsors of such events are the public sector banks. And they talk of whether it is a Swanidhi or a Vishwakarma or a Stand Up India or a whatever, Mudra loans. So by the way, Mudra loans is celebrating 10 years. It's been a decade now, ever since it was announced in 2014, and there was a hoping success of this particular scheme. Now, that's on the social agenda, which is about the financial inclusion. The other side, if you see, what I also believe, and I'm sure my co-panelists will agree, that in today's world, wherever there is a human race available, there is one thing, no matter how much chat GPT or AI or an ML you put in the system, or you digitize your system, there is one thing which is common and will remain so ever since, till such time the human race is alive, is the relationship. Now, at the public sector bank, I think we were probably, there was a time when the point of sale was the bank, and now it has, for the last 2 decades, we've seen that the point of sale has moved to the customer's place. So it is imperative that we establish a relationship at the point of sale and not at the bank. Yes. So that concept has changed, and we at Bank of Baroda, we have realized this, albeit late, but we have understood that then you need to be at the customer's place proactively rather than being reactively.
Very well said.
So we need to be proactive in our approach. One, relationship building is just not a one-time relationship. An MSME you engage, like I said, the progression happens from a micro to a small to a medium to a mid-corporate to a large corporate. That's the natural progression of any business. And as long as that happens, the economy will also boom. Now, in order to do that, you must have a relationship at each level. And a relationship has to be perpetual in nature. It can't be a stopgap treatment. A relationship essentially would also mean that if the customer is not happy with you, you proactively go and make him happy. कि आपको क्या problem है? What is the issue? It is. I tell my team that आपको तो उसके मुंडन में, उसके शादी में, उसके श्राद्ध में you should be there. You should be with him. You should treat him as if you are a part of his family.
And I think there is something very unique with PSU Bank, that they are the only set of bankers who can boast that I was a banker to this company when your grandfather was running, your father was running. Yeah. This you will not hear from a private or a foreign bank.
So I was telling Jaspreet ma'am, who was a part of the women entrepreneurship panel, I was telling her, she banks with us, and she was speaking very high about Bank of Baroda, and I thanked her. So she said, and I keep meeting borrowers at various parts of the country, and they say that हमारे दादाजी ना Bank of Baroda से business शुरू किए. पापा न मानते हुए भी उनकी बात सुन ली, बिकॉज दादाजी की बात पापा हमेशा मानते हैं. मैं पापा की बात नहीं मानता हूँ. यू हैव टू ऑफर मी एट पार विद एनी प्राइवेट बैंक, अदरवाइज आई एम गोइंग टू वॉक आउट. बट द फादर विल बज इन एंड से, नहीं, ये जब तक मैं जीवन जिंदा हूँ बैंक ऑफ बड़ौदा से नहीं जाना है. सो इट्स अ टिपिकल इंडियन स्टोरी, बट वी अंडरस्टैंड, सी एज लॉन्ग एज, नॉट दैट आई एम अंडरमाइनिंग द पोटेंशियल ऑफ द, वी नीड टू बी abreast, we need to be at a similar pace at what the private sector banks or even the NBFCs they are doing. And we learn a lot from them. During our co-lending interaction with various NBFCs, we find how smartly they have navigated into the market. And
but do you still see that still some of your frameworks needs to evolve further, which can facilitate access of capital to SMEs and the startups?
So we do have some archaic, those principles and product and programs and the policies which we are. But let me tell you, our board, our top management, they are very, very clear that it's don't have that mindset. So we have a very young MD today. He has 7-8 years ahead of in this career. Earlier we used to find an MD who would retire in 2 years. तो चलो भाई करके निकल जाते हैं. So we have a person who has a long career. Our ADs are very young. So we have a young mindset, young team, and I think so there is a dynamism. There is a blend of the old and the new. So that is making Bank of Baroda what it is today, a 25 trillion book size.
Good. Moving on to, sorry, you want to add?
I said, since you've asked that question, I'll just add on. On TRED's platform, our 3 lakh crore, so that 70% is funded by the public sector banks.
Wow.
So that means 2 lakh crore is coming liquidity from public sector banks, and only 1 lakh crore is coming from the private sector banks. And the example I was giving you of the one of the branch is of one of our public sector bank only, that is christened it as a branch of the TRED's branch. So that's the kind of aggression on the digital side that we are seeing from the PS banks.
So bringing you in the discussion, Mr. Chowdhury, and you represent SIDBI, which is actually seen at the center of the small and medium enterprise entities. And SIDBI, as its mandate had been into terms of supporting the SMEs since inception. What are some of the government policies and frameworks which you see are very critical for the SMEs? The current one and anything that you anticipate will come in the recent time, maybe as an insider information to our audience today.
Hello. Thanks to DNB for giving a platform to SIDBI. Sir, coming to a question, allow me to oversimplify things, if I may. From what our understanding of the government policies are, that they are basically trying to do 2 things. One is to enable young entrepreneurs to become job creators rather than job seekers, as was the system previously. And the second thing is they are trying to encourage entrepreneurs to create value in the system. So just let me elaborate. The first part I think is clear enough. Everybody wants to become an entrepreneur now. The second part is government is trying to target those areas which is going to lead to a lot of improvements in the economy or in the ecological balance, etc., climate change and so on and so forth. So taking a cue from what our Honorable Finance Minister said during her interim budget speech, there were a few areas which were outlined by the Government of India where the intent was clearly stated, but the details were, it was indicated that the details would come in some time. So I guess now when the main budget comes, we will see more elaboration on those issues. So I'll just outline 2 or 3 where SIDBI is specifically interested. One is, of course, the deep tech funding in defense sector. So that is an area which the government has targeted very, very seriously. And this, apart from that, two more things which are very important right now, even as citizens of India, we feel they are very important right now. One is the EV sector, for not only for manufacturing of EV vehicles, but also for building up the infrastructure for charging, which is very important if the manufacturing is to take off. And one offshoot of this would be improving the e-bus numbers in various cities. So that also is a big thing. And the second thing here is the stated target of the government of India for solar rooftop to 1 crore households. Now, all of these things will not only improve the entrepreneurial culture in the country, but they will also serve national imperatives, which is very important. Now, from our side, from the side of SIDBI, we are actively engaging with the government on all of these issues. For example, for defense, we already have a separate setup for defense and for defense funding. And going beyond that, once we entered this area, we found that this is an area where very specific technologies need to come in, which would have long gestation period. And these things would be started by very young minds, where your traditional banking challenge will not work at all. So we have gone beyond the financing also. We have tried to engage in the pre-financing area. For example, we already have tie-ups with almost all the IITs and IIMs and other institutions like IISCs, etc., where we are funding incubation support to them by way of investment in equity, not as grant. Very small amounts, very, very small amounts, but it gets them started. Number one is it gets them started on the journey. And the second thing is that when they go for the fundraise, the proper fundraise, at that time they can leverage the fact that they have already had incubation support through IITs or IIMs from an institution. So this is one thing we are doing. So far as the other two are concerned, the EV and the solar, we have a separate vertical dedicated for this kind of funding. Those of you who are from Delhi, you would have seen SIDBI branding on the house cars metro station. That is part of that branding. So we want to encourage the sector from this side, and we are engaging with multilateral agencies for getting specific funds, cheaper funds, so that we can on-lend this to this sector at a very, very competitive, or in some cases even lower than competitive rates. So these are the areas at least where SIDBI is engaging very, very strongly, and we believe that this is good for the government, good for the financial sector, and good for the economy.
I think this is very informative, and maybe I'll also request you to add a flavor to it in terms of when you have to build robust business, a long-term sustainable business, financial literacy is very critical. So, I mean, entrepreneurs should not end up funding the short-term assets with long-term sources, and the vice versa, where you're funding your fixed assets with your working capital. It's a recipe for failure. And I think a gentleman before the panel, actually, we were talking in the room about it. So maybe do you see somewhere the government bodies and the financial institutions, or is there anything which is already in this ecosystem where things are being worked to support the entrepreneurs on that part?
Yes, I mean, I can speak for myself. We are already very, very strongly into this sector. Let me put it in 2-3 different points. One is that first of all, we have about 6 crore plus MSMEs in the country. Out of that, not around maybe 25 to 30% would be GST registered. Maybe not more than that, I guess.
Yes.
So the others would lose the chance of participating in the formal financial system. So that creates a problem for them. So having recognized this, SIDBI has worked with the government of India, and we are trying to build up. All of you know about the Uddam registration portal.
Yes.
But then there is a substantial gap between the number of MSMEs who are registered there and those who have not been able to register because of other reasons. So what we are trying to do is we are trying to formalize them. We have already started an initiative whereby it's already ongoing. I mean, we are already about 25% to 30% through, where we are trying to access alternative data points and trying to get them registered in the Udyam portal so that they can not only become credit ready, they will first become KYC ready and then they will become credit ready. So the ultimate target of SIDBI is that, I should say the government of India, we are only a channelizing partner. The ultimate target of the government of India is that all MSMEs, bar none, should become credit ready and participate in the financial system, because now, right now with the liquidity in the market, financing from the financier side is not much of a challenge. The challenge is for those who will seek the credit from the financial sector to be ready to take it, not only from the point of view of KYC or other things, but also from their financial literacy part. So which brings me to the second part about financial literacy. We have, once again with the assistance from the government of India, we have started something that we call, we are very proud to say that, we have started an initiative called Swavalamban Connect Kendras. There are more than 100, I think there are about 200 right now in India, where the objective is that we have a hand-holding footprint on the ground in every district, where entrepreneurs can come and they can understand what kind of projects to undertake. We'll help them to decide their projects also, what kind of documents they require for it, where exactly they have to register, and how to take it forward. Once they do that and they come to a bank or a financial institution for money, after that also the hand-holding continues. So this is one very small thing that we are trying to do from our side.
I think you covered it well and very, very informative. Thanks for that, Mr. Chowdhury. Moving on to you, Mr. Mohindru. Would you like to share some example how data and technology today is actually helping in terms of reducing the credit gap in a way? Because I think earlier, walking into a bank or institution with a file, now of course, as earlier Siddharth was mentioning, that the data is available digitally. So maybe something that probably will talk on that.
Okay, so I'll probably give a response with the practical example that we are today following. If an MSME needs to borrow from a bank or wants to any financial institution, bank or anybody else, he has to furnish his entire financials credentials as per the format to a specific financial institution. When he is coming on Threads, he is giving his KYC one time, and thereby he is accessing 60 banks in one go.
Wow.
Okay, so that's one example, very simple example.
That's what technology has done.
That's what technology is all about. So you get access to 60 banks, and whether you access them today or 5 years later or 10 years later, you don't have to repeat yourself or don't have to sign 60 agreements. Today, SBI may finance, tomorrow BOB may finance, day after PNB may finance, anybody may finance. You don't have to sign agreements again and again, you don't have to give KYC again. And this is one small example. The second example now, the more intelligent example, is that the SMEs who onboarded Threads, let's say 5 years earlier, today have left an audit trail or a data trail of their relationship with their customers. Now, basis that relationship with their customers, we have now started giving credit limits to these SMEs for buying their raw material from tier 2. Now, why? Because we know that how many times their shipment is accepted, rejected, what percentage is accepted or rejected by their customer. We do a cash flow analysis basis their bank statement.
And this is actually more dynamic credit assessment than a static where you analyze the balance sheet, right?
Absolutely. So this is, you are very right. We are not doing the balance sheet analysis only. We are doing their bank statement analysis, their GST analysis. Now, once you have done this data is again now available to as many banks who are interested in SME lending, and therefore again data symmetry for 60 banks.
Yeah.
So this SME will be attended by 60 banks, and whosoever is interested will offer that credit to the SME for his raw material purchase.
Yeah.
So essentially India has progressed very fast, and now when we go to other developing and many developed countries also, they don't have such scenarios or the infrastructure supporting that they can replicate it in their country. So we are actually blessed that we are going through an era in the last decade, I would say, where all this has been made available, and as entrepreneurs, as financial institutions, as banks, as fintechs, we have very nicely used it.
Giving a slightly different twist to the discussion, and maybe I mean, an ex-banker inside me is making this ask to a banker. When you appraise a credit proposal, right? So there's certain things that you would look in the company's profile, balance sheet, but there's a larger comfort being drawn by looking at the promoter, the way he has behaved in past. And then maybe this is something which is where the experience of a banker is different with different entrepreneurs. But over a period of time, as a banker, you develop a skill where you're looking for certain basic traits in an entrepreneur. Maybe for the benefit of the audience, if as a banker you can share that if you're reaching to me, and these are the probably the few things that probably I appreciate as a basic, I would say, financial literacy or, I mean, overall personality of an entrepreneur.
So very nicely framed question, although a difficult one. But then, because there is no rule book which says that you read a person's face. See, we are not fortune tellers. We are not a Samudrik Shastri that I can read your face and tell tomorrow you're going to, pay me on time. However, yes, we look into a couple of things. One is, of course, the rule book says that these are your financial ratios, blah, 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 which everyone brings. So my advice to the promoters here would be, and the SMEs would be there, one, today with this evolved system, like my friends were saying, and today everything is so transparent, the data is so transparent that, especially with the CICs coming into the foray, everything gets recorded, right? So it is very important that you please be financially disciplined. Financial discipline essentially does not mean that you have to keep a CFO. No, I'm not saying that. It depends what scale you're operating. But as an entrepreneur, if you are a small-time manufacturer or a trader, just understand the basic nuances of the finance. You can approach any bank. You can approach SIDBI, like he said. Even we have FLCs. We have financial literacy centers. We have RCTs at the rural areas. Every bank has that. Please approach them. You will get the desired financial knowledge, because you might be an expert, you might be an engineer who is manufacturing something, or you might be a typical businessman who comes from a gaddiwala and you're a turned trader now, wherein your hisab kitab is looked after by some babu. Now you want to enter into the formal banking channel, you want to credit. आपसे गुजारिश है थोड़ा सा financial literacy जानिए, आपको ratios जानने की ज़रूरत नहीं है. What is it important is that timely आपके submissions कीजिए, चाहे YTR हो, GST हो, इनको समय से फाइल कीजिए. अपनी क्रेडिट रेटिंग को मतलब मेंटेन इट. आई एम नॉट सेइंग दैट एवरी टाइम यू हैव टू इम्प्रूव. इन अ स्मॉल पार्लेंस रैंकिंग CMR 1 से आप हमेशा CMR 1 न रहे, लेकिन 1 2 3 में हमेशा रहे. डोंट लेट दैट स्लिप हैपन. पे द फाइनेंशियल्स ऑन टाइम. इवन एन SMA 0 मूवमेंट अपसेट्स योर रैंकिंग. SMA 0 मतलब 0 to 30 DPD जो होता है, इसमें वो भी. तो ये तो थोड़ा थोड़ा DPD का कॉन्सेप्ट है. Please understand these things very well. And I don't know whether in this audience you have chartered accountants who help these MSMEs. So I have two types of feelings for them. One, I'm pretty upset with the way they sometimes misguide the MSMEs, and sometimes I appreciate their effort how they navigate the MSMEs. My appeal to you, because you are experts in the finance field, guide them properly. Guide them in the right manner so that they can get a good credit score and get best of the pricing. I sympathize with them in the morning. I was saying that आप अगर अच्छे MSME में मेहनत करते हैं, if you are growing, you must demand a rate at par with an Ambani or an Adani. Why not?
So maybe in the interest of time, I'll echo what you're saying.
Yeah.
And make a comment which, I mean, again, as an ex-banker, I'm getting motivated to say that is, if a borrower is proactive in submission of the data, because as a bankers we are the custodian of public money and we appraise credit proposals and monitor it on an ongoing basis. Rather than chasing the lender, the borrower, if the borrower is proactive, it gives a lot of comfort. And that regularity of timely submission on the backdrop gives us the comfort that the things are good. They're not being cooked. So thank you for your inputs on that.
If I may add to that, I think it's not only about submission of data, and on a regular basis, we see two kind of customers, right? There's the kind of customer who will proactively call, who will be regular in his repayment, but who will be proactively calling you saying, मेरे को लग रहा है शायद 2 महीने बाद मेरा payment delay हो सकता है.
Yes.
That's the best time when a bank can sit with the customer and figure out कि अच्छा क्या कर सकते हैं. Versus another one जो पेमेंट डिले करेगा 2 महीने तक
Bankers or financial
2 महीने तक
institutions
फोन
don't
नहीं
like
उठाएगा.
surprises. Nobody likes surprises.
The situation is the same, manageable situation, because there's a temporary cash flow situation which all MSMEs will go through. It's a very volatile industry. But there's one person who's proactive, who's envisaged and has been transparently coming and telling the financial institution that this is what I might encounter. Let's figure out how we can solve this. As against the other one who will just escape and try and avoid the interactions.
So with that, I'll shift my track and move on the role of data and analytics in for the SMEs, and to you, Siddharth, because your business is, again, lending pieces are more driven by data. So maybe you like to give some inputs that probably how as Indifi you are leveraging data and analytics on a day-to-day basis in your business.
Yeah, so couple of examples. So again, when we started business, we saw that one thing we wanted to do was go and serve customer segments which were underserved. And traditionally there have been certain segments where people do make negative perceptions, and those perceptions continue over time. Two examples. One of the largest segments that we lend to is restaurants, right? Food delivery restaurants in general. And if you look at any statistics, that's a business which has the highest mortality rate. About 20% of the restaurants shut down every year, and that is the reason lenders say, okay, we want to stay away from this segment. So we said, okay, let's figure out how can we make a database model which helps us predict which restaurant may shut down in the next 12 months. Typically in lending, what we do is we say, okay, I want to predict the probability of customer defaulting. Here we said, okay, I want to predict the probability of the business shutting down. And there's enough data available in the public domain. So today, if you pick up any restaurant, you go to Zomato, open the link, you will find the last 5 years ratings, right? That data gives you insight, okay, suddenly you see somebody was getting 5-star ratings, he's getting 3-star ratings. He was earlier getting 200 ratings a month, now it's 50 ratings a month. Clear indication that his footfalls are falling, his quality is going down. You see, okay, in that locality, he was the only Chinese restaurant. Now there are 5 Chinese restaurants, so his competition has increased. Using all of that data, we actually came up with a model and we backtested it. And the results came out to be pretty good in terms of how we were able to predict that this business will shut down in the next 12 months. So that's one example on which we worked. Similarly, another segment which we used to lend to was lending to travel agents. Now, the standard industry thing was that no, travel agents, we don't know what the business is. So we say, okay, let's go back and see where are they spending money. They're buying tickets from a certain platform. There's an ITA platform or there's large consolidators. What kind of tickets are they buying? Are these, tickets in the name of different people? Are they international tickets versus domestic tickets, which means he might be catering to corporate if he's buying a lot of international tickets. So using all of that data, again, we built indicators which gave us insight into the quality of the business.
Yeah. I think we ran out of time, so probably I'll have to hurry up on my last track. And a question to both of you, Mr. Bhattacharya and Mr. Chowdhury. Co-lending has evolved in the recent times, and it's like banker working with a partner and providing a refinance or an extension to their portfolio, so that probably bank is able to increase or ramp up their portfolio. At the same time, it helps SMEs in a big way because bankers are not reaching out to them directly. Do you see any scope in terms of further incentivization to this model, or are there any risks associated with it that is not leading this to grow at the pace that it should have grown?
So let me tell you, this is a very new concept, and it has not been, it has not evolved the manner in which it should have evolved. It was contemplated, and it's a fantastic, philosophically speaking, it is a fantastic model. It's probably the only model which benefits all the 3 beneficiaries, right? It is the customer gets the best of the rate because he gets a blend. The public sector bank, or the large banks rather, in that case, even the private banks, they have the access to the last mile where in the products they are not currently financing. And of course to the NBFCs, if they have 20 rupees, if they have 100 rupees in their pocket, especially typically the liquidity challenge ones, they can lend to 5 borrowers instead of 1. So, and plus they also get the benefit of competing. The NBFCs typically get a benefit of competing with large banks. So I think it's a fantastic model. What probably cripples the whole or challenges the whole theory is that implementation of this. See, essentially it is like when in terms of the financial discipline, I will not say rules, not the discipline, the rules. There are a certain set of rules which are differently followed in an NBFC versus that of a bank. So unless you have a common rule, so I'll give a small example. If so you can always say that you have a platform, a digital platform, you onboard the NBFC and they co-lend together. So the disbursement is very easy, 80, 20, 70, 30, whatever is possible. But when the collection comes, the difficulty is that if you follow a different accounting principle and I follow a different accounting principle, in the sense that 100 rupees come, if I apportion the charges, if I follow a CIP, which is the charges, interest and principal, and you follow a PIC, a principal, interest and charges, I mean, your accounts will never get reconciled and you will end up in big problem. Two, there is a DPD theory, you follow a day-to-day DPD, they follow at the end of the month. So I think you need to be pretty aligned, not aligned in theory, but in the system. In our bank, we are very clear, we will not lend this manually, we have to do this digitally because it involves enormous applications. So I think there are challenges, but RBI, it has been brought to the notice of RBI, they're trying to ease out. Initially, it did not take off in the co-origination, that's how the option 2 came in. But I think the road is pretty long and we need to travel.
Maybe I'll shift this or maybe modify this question, probably the last for our panel today, for Mr. Chowdhury is, how do you see, at the end of the day, there is a lot of work being done by government to promote SMEs, and SMEs are going to be the integral part of India if we have to become the third biggest GDP, which we are poised to become. How do you see the government schemes can be made more effective if there is a better coordination between the government bodies, the regulator, the private stakeholders?
Okay, I'll give an example, small example. As we are running short of time, I don't want to be too long in my answer. The prime example that I can give from my experience of an effective partnership between government, FI and the private players is something called Fund of Funds being run by the Government of India. About 10,000 crore has been allocated by Government of India for investing in fund of funds through which alternative fund investments can be made. So this fund is being managed by SIDBI. So the money belongs to the government. The fund is being managed by SIDBI. We evaluate various alternative investment funds and we pump in money from this fund to them. So they are the private players and then they invest in the areas of their own interest. Each fund has its own areas of interest. So they invest this money in those companies where they feel the potential is there. So this is an ongoing program, which is we are about halfway through that, and so far the results are more than satisfying. So I guess this would need to be replicated once it's over. So this is a prime example that I can give, that I can think of right now, where all the three players are on board and together.
Thank you very much. I think audience has been pretty patiently listening us, and probably they would like to more hear from you, but we ran out of the time, so probably we can't have a Q&A, but these guys would be available for a networking later on. I think a very informative session for me in terms of what SIDBI is doing and what Bank of Baroda is doing, and what as a TREDS platform, what Sundeep and his company is doing, and how data is being leveraged by Siddharth in his business. So very informative for me. Thank you very much, guys, and thanks audience for the time.